Yeah, good morning. Hope you all good. Okay. So yesterday I have shared you about the market structure and advanced market structure. So that's the part one video. And this is the part two. We're going to see the examples of the market structure and advanced market structure. Have you valid the breakout or what is a fake out? So these all the things we're going to look on into the live charts. Okay. So here, let me recap you what I told you yesterday. We have told you about the breakout. Okay, so this we called as a breakout, and when we have a opposite side breakout, we called as a breakout structure. It have breakout on opposite side and the same direction. Okay, so when we have a breakout on the both side, we call this a breakout structure. When we have a one side breakout, we call this a breakout. Okay, so this happens on price reversal. This happens on price continuation. Okay, price continuation. So when you have a breakout structure, continue with the breakout, continue with the breakout like this. It means the trend going to continue, the trend going to continue with the same direction of the breakout structure. Understand? So this is the breakout structure and breakout. Yesterday I have teach you about that. Then if you are seeing a breakout in the candlestick, the candles need to be, you have a candles like that. If you are seeing the breakout structure or breakout, it means the price need to, the wick need to broken by its candle, or the candle body broken by the next candle body. Okay, so this we consider as a big breakout. Okay, so when you have seen this candle taken by the next candle wick, so we have a wick here. So when the wick was taken by the next candle wick, okay, we called this a sweep. We called this a sweep. So when you see the sweep in higher time frame structure and you go for a breakout to the downside, it means the direction going to change. When you are seeing higher time frame sweep following by the breakout structure, breakout to the downside, it means the price going to change the direction. Okay, so it means the price going to change the direction to the downside like this. So understand what is a breakout and what is a breakout structure, what is a sweep. So let's get into the chart. When you have starting to trade, you always start with the higher time frame direction. Okay, so this is Euro USD daily chart. What I told you that whenever you have seeing a sweep, it means it continues to the price trend change, right? So you can see this week taken by this week. You can see my chart clearly. So here, this week, taken this week. So we called this one as sweep. What we called here, sweep. So the sweep, and let me get into the breakout to the lower time frame. You can see where the candle come from. The candle comes from here, right? So the candle comes from here to taken this sweep. So for a breakout structure, you need to see that the price need to broke this high. Okay, so this high need to be broken. If you want to see a clear breakout, go to the line chart, so that will tell you the clear breakout. So understand that. So this candle sponsor this move. Now this move broken here, so this called as a breakout structure. So when you have a sweep and a breakout structure, what I told you, it lead to the change of directions, right? So now what the price going to do after sweep and breakout, breakout structure, the price take the internal liquidity like this. The price take all the internal liquidity like this, and it is start to move from upside. So the price can move to change the direction to the upside. Understand? So same like that. Whenever you have a sweep and breakup structure, the price lead to uh, change the direction. So here you can see the price is falling down here, okay, and when you have a seen a sweep, so where here is a sweep, you can see the sweep, the candle wicks, what I told you, the candle wick need to taken by the coming candle wick, okay. So when the wick was taken by the wick, it continue to the change of direction followed by the breakout. So when you get into the H4 time frame, so what I told you, where the price coming from? So the price was coming from here. So this candle sponsor this move to take this week. So for me, it need to break out to the upside. Understand? Because this candle sponsor this move to taken this week. Okay. So for me, this candle body need to be broken. So when it broken, it calls breakout structure. So what I told you, when you have a sweep and breakout structure, it lead to change the direction, right? Now, now you can see the higher time frame structure. So here you can see, so you can see what happens here. The price change to direction from to the bearish. So when the trend was changed from bearish to bullish because of breakout structure and sweep. Okay, sweep and breakout structure lead to change the direction like this. So this is how you need to find a sweep and breakout structure in the chart. Understood? So the same like that into the upside. Here you can see. So here you can see we have a sweep. Okay, the price was coming from here, the price was coming from here, and we have a sweep. What the price do, the price changes the direction here, and we have a sweep here that lead to direction here. Understood? So every sweep is lead for change of direction in higher time frames. So let's get into the H4 time frame. So when the sweep was happened, so this is sweep and breakout structure. Okay. So after that, everything we called as a breakout. What I told you, every breakout lead to continue the trend. Breakout structure lead to change the direction. Okay. Breakout lead to continue the trend. So whenever you have a breakout following by the breakout structure, it lead to continue the trend like this. Okay. So when the trend was changed, the trend was changed when the sweep was secure. Okay. So when you have a sweep like this, the trend was changed to the downside. So, okay. Next, when the direction was changed, when you have see another sweep. Understand? So this is how the market direction will change from one direction to the another direction. Hope you can understood this. Okay. And the important thing, every time the price, every time the price taken the new highs to the upside like this, it will came to take some internal liquidity and go to the upside. That we call the sweep. You know how the sweep was formed? How the sweep was formed? The sweep was formed because of the price, if the price taken the high like this, then it came to take the liquidity like this. Okay, now in this area, it will trigger buy and move to another high. Okay, so this we called a sweep. When we have a this one, we called as a sweep. This move we called as a sweep. Okay, so every sweep is for taking the liquidity. Understand? Every sweep happened for taken to the liquidity. So for example, let me show in chart. Okay, so here we have a sweep, right? Here we have a sweep, right? Why this sweep was happened? Because you can see here the price move from this one, this swing high, this low, and it made a new high. Okay, so for that it created a fake structure and move upside and taken the fake structure here and it moved new high. So this we called as our internal liquidity. I will tell you explain briefly explain you about the liquidity in the next class. So here you understand why the sweep was happen. The sweep was happen for a making new highs. Understand the sweep was happen because of making the new highs. So other than that, you need to know about fake structure. So what is the fake structure? I told you that when you have a swing highs and swing lows. So here we have swing low. Okay, okay. So here I have a swing low here. This we call as a swing low. Here we have a swing highs. Okay. So in between these all fake structures. Okay, so what the price do? The price came to take all the structure to fail and it came to the level and it made a new high. Understood? So after that, what the price do? The price came to take, you know, the price came to take the all the things to fail to the upside. It failed to all these fake order blocks like that. Okay, it never react from here and it will came to this level. Okay, and this level won't broken, it made a new high. Understood. So what is the fake structure? The fake structure means in between, the swing highs and swing lows. The structure between the swing lows and the swing highs or all the fake structure. The price came to take all them out to make a new high. Understand? So whenever you start building bias or start to take a trades from when you're going to start a trades, you always need to look from a higher time frame structure, which is weekly, daily, or monthly. Okay, so you always need to look for at least three time frames for taking any trades. If you are going to take if you start from monthly, if you start from monthly time frame, you need to look a weekly time frame and daily time frame. So you always need to look for a three time frames: daily, H4, and H1. If you are looking from H4, you start from H1 and you end from M30. Understood? So when you start from a monthly time frame, you need to consider a weekly and your entry maybe from daily. So when you have taking a swing trades, this time frame will be help. So and then when you start from a weekly time frame, you must carry on the daily and H4. Okay. So these two are the father of bias. Okay, so this will give you big direction to the this whole expansion. When you find the direction on this time frame, it we called as expansion. Okay, so when you seeing the expansion move on this higher time frame, the move was very big. Okay, so when you are an intraday trader, you can look for daily H4 H1 for intraday. Okay, and this one for scalp too. Okay, so you need to consider at least a three time frame here. So in upcoming classes I will carry on about the liquidity, how to see how to mark your liquidity, what are the internal liquidity, what are the external liquidity, what the price will do after taking the internal liquidity, what the price will do after taking the external liquidity. So what liquidity you need to give you most importance. If you have a monthly external liquidity and the same time you have a daily internal liquidity, so in this, between these two, where you need to give more importance to it. Okay, so you always need to know about that, the liquidity, how to use it, how to find it, what are liquidity is important. uh, you know uh, you can't trade from by only that liquidity. You need to attach the things about the key level. When the key level and the liquidity was combined, the move was very wide. Okay, so when the liquidity was only found, the that will give you approximately 60 percentage win rate. When you consider these things to the key level, it will give you approximately 80 percentage win rate. Okay, so I will tell you about the next classes about what are the liquidity. So this class is about the market structure, advanced market structure, what is a breakout, what is a breakout structure. So what happened after the breakout structure, what the sweep happens. Okay, so I explained you all these things. So keep in mind. So this is our part two video of the advanced market structure. So these things will help you to know about the market structure and advanced market structure. So these are the things, basic things. Okay, before you enter into the advanced section, you need to know these small basic things. So this is the short video of that video. I will see you on the next session with the liquidity concept. Okay, so thank you. Have a good day.